So it's time to learn about the Gartley pattern, and as you probably know by now, the Gartley is one of the most popular advanced patterns out there. It was actually founded by H.M. Gartley in his book called Profits in the Stock Market, and it gets its name, the 222 Gartley pattern, because it was found on page or described on pages 221 and 222 of that book. On these pages, Gartley referred to a series of events that offered one of the best trading opportunities out there. So what we're going to do in this training lesson, I'm going to run through the ROE of the Gartley pattern, so the rules of engagement. I'm then going to draw it in and run through the ROE once again. Then we'll take a look at some live action charts and see if we can identify some on our own. So the first step of the Gartley pattern is our X to A leg. So the first step in identifying Gartley begins when the market creates an impulse or an anchor leg, which is our X to A. Once this initial move is created and identified, we can start to look for the rest of our criteria to be met. Step 2, the A to B leg. After our initial X to A move, so our anchor leg or our impulse leg, we look for price action to make and complete a valid B leg move. For the Gartley pattern, the B leg is considered to be valid if price action completes and retraces between the 61.8 and 786 Fibonacci retracements taken from the X to A leg. This means that the wick of the candle must at least touch the 618, yet cannot touch the 786 retracement. Again, the wick of the candle must at least touch the 618 retracement, yet if it touches the 786 retracement, the pattern is invalid. Step 3, the BC move. Once the criteria for step 2 are fulfilled, we can now look for a valid C leg. The market creates a valid C leg by fulfilling a minimum 618 Fibonacci retracement taken from the A to B leg. As in step 2, as long as the candle wick touches the 618 retracement, this leg is considered to be valid. Now the optimal retracement zone will be somewhere between the 618 retracement and the 786 Fibonacci retracement, but as long as price action does not push beyond the A leg, then the C leg is still valid. So again, as long as the wick of the candle does not push beyond the lows or the highs of the A leg, depending on if it's a bullish or bearish Gartley, this C leg is still considered valid. Step 3, the D completion. The CD leg of the Gartley pattern should equal the length of the AB leg, giving the trader an ABCD pattern completion. In a perfect situation, this AB equals CD pattern completion should also meet at a 127.2 Fibonacci extension taken from the AB leg, as well as a 786 retracement taken from the X to the A leg. Once the C leg is complete, the trader should start to project this area on their charts and predict where the pattern should complete. Again, we're looking for our pattern completion to be at A, an ABCD pattern completion, B, the 786 retracement from X to A, and D, a 127 extension from our A to B leg. When all of these factors line up, we have the perfect 222 Gartley pattern. Okay, so let's go ahead and draw one in. We start with step 1, identifying our initial impulse leg. So right here we have our X to A leg, our impulse or our anchor leg. We then bring a Fibonacci retracement on using our Fibonacci retracement tool from our swing high, which is the X point, to our swing low, which is the A leg. For our B completion, we're looking for price action to at least hit this 618 retracement, yet it cannot touch this 786. So anywhere inside this zone gives us a valid B leg. We then take our Fibonacci retracement tool once again, and we measure a Fibonacci retracement from our A to our B leg. So from our swing low to our new swing high. In here, we're looking for a C leg to complete anywhere between a minimum of our 618 retracement and a maximum of our A leg. So we can have a completion right here at 618. We can have a completion right here at 786, 886, even as low as retesting the A leg. As long as we don't penetrate it and push beyond, the pattern is still valid. And we'll put that right there in the middle for now. Lastly, to look for our pattern completion, we're looking for a few things to line up. First, we're going to predict an AB equals CD pattern completion. So I'm going to take my A to B leg, I'm going to copy and paste that, and I'm going to project an equal measure move. Comes in right here. Next, I'll look for my 786. My 786 is a little bit lower at 3506. Lastly, I'll take my Fibonacci extension tool. I'll draw a line in from my swing low to my swing high, so my A leg to my B leg, and back down, and look to see where this 127 extension lines up. I'll then draw the zone between my 127 extension and my 786, and this will be my completion zone for the Gartley pattern. Now for a bullish Gartley, all we have to do is flip things upside down. So we still have our initial impulse or anchor leg, X to A. We're still going to bring in our Fibonacci retracement tool from our swing low to our swing high this time. And we're going to look for our B leg again to complete at a minimum of our 618. And if we touch our 786 retracement, if the candlestick wick touches it, it's going to be invalid. We then take our Fibonacci retracement tool once again. We draw it from our A leg down to our B leg. And we know that as long as price action comes to at least our 618, we have a valid C leg for our Gartley pattern completion. Again, we can come anywhere between the 618 and our A leg and still have this pattern be valid. Now for our pattern completion, we'll once again copy and paste our A to B leg, just like we would do with any ABCD pattern. We'll tag that on to the end of our C leg and project where an ABCD pattern completion would put us. So we're looking for this ABCD pattern completion. We're looking for our 786 Fibonacci retracement from our X to our A leg. And then lastly, we'll take our Fibonacci extension tool from our A to our B, swing high to swing low this time, and back up. And we'll look for our 127. The area between our 127 Fibonacci extension, our 786 Fibonacci retracement, and our ABCD pattern completion is the kill zone for our Gartley pattern. Okay, so let's work on identifying some Gartley patterns in an actual market. So looking at an actual price chart. And as you'll notice as I scroll through this chart, we're going to see various Gartley patterns. And well, they're not all as perfect as when we drew them out earlier. So let's scroll through. Let's see if we can just eyeball some. All right, looks like one right here. So you can see we have our initial move, our impulse leg right here from X to A. We'll go ahead and label that. Our X leg to our A leg. This is our starting point. We then want to take our Fibonacci retracement tool. We want to take that from our swing high, so our X leg, to our swing low, which is our A leg. And for a valid B retracement, we need price action to at least hit the 618 here in red and not hit the 786 up here in green. And you can see price action, we come to the 618, we wick past it twice, but we don't hit the 786, giving us a valid B leg. Now, for our C leg to be valid, we need a minimum of a 618 retracement, and this time we're going to take our Fibonacci retracement tool. We're going to go from our A leg to our B leg, so our swing low to our swing high, and you can see price action comes right into the 618 retracement, giving us a valid C leg. Now for our D completion, we're looking for a few things. First, we're drawing on an equal move, so an ABCD pattern. So we can copy and paste our A to B move. We can drag that onto our C leg and predict where that's going to complete. We can also look at our 786 right here. And then if we take our Fibonacci extension tool this time, we're going to draw a Fibonacci extension from our A leg up to our B leg, back down, and we're going to look for a 127 extension. This zone between the 127 extension and our 786 is the kill zone for our Gartley pattern. Now we'll go over the specifics of uh, different ways to enter or different points to enter when you get something like this, when the ABCD doesn't necessarily line up with the 786 and the 127 is a little higher. But for right now, we just want to work on identifying the Gartley pattern. So a beautiful one right here. X to A to B, B to C, and you can see a CD completion right up at our 127 extension. Let's see if we can get another one. Not if, let's see when we'll get another one. I'm sure there's plenty in this market. Again, just scrolling through. And here's a good example right here. Here's a Gartley pattern that actually pushes down really deep, but as you'll see, it still retraces into what would have been a winning trade. Now we have our initial anchor leg. This one is going to be a bullish Gartley pattern. So last one was the bearish. As price action pushed up, we sold at our decompletion. You'll see that this one is going to be a bullish one. So we're going to buy at our decompletion. But the first thing we need to do is identify our impulse leg. So again, looking at our most recent swing low to swing high, we're going to label that. Our swing low is going to be our X. Up to our swing high, that's going to be our A. And the first thing we need to do after identifying our impulse leg is take our Fibonacci retracement tool, drag it from swing low, so our X leg, this time up to our A leg, and look for this 618 retracement. Now again, you can see price action comes down. We actually penetrate and close below the 618, which is fine. And as long as we don't hit the 786, we have a valid B leg. After our B leg, we want to take our Fibonacci retracement tool again. This time we're dragging it from our A leg down to our B leg. And we're looking for at least another 618 retracement, which you can see price action comes right into, giving us a valid C leg. Now, just like last time, for our decompletion, we can start to measure that out a few ways. We can take our A to B move. We can copy and paste that move, attach that to our C leg, and project an ABCD pattern, which is going to come down right here. We can look at our 786, which is going to be a little bit higher. And we can take our Fibonacci extension tool from our A leg down to our B leg, back up, and look for that 127. Now, just like last time, you'll see our 127 completion is going to come right at our 886. So again, we're drawing out a kill zone between our 786, our ABCD pattern, and our 127 extension. And you can see price action comes right into that zone and reverses. Now you're probably asking yourself, well, Akil, look, price action spiked down, and wouldn't we have been stopped out on this trade? And the answer is no. And we'll talk about targets and stops a little later, but this is exactly why we want to put our stops in a safe enough zone where the market can probe past there without stopping us out, still allowing us to have a profitable trade. But again, for right now, we just want to worry about pattern identification and being able to recognize this Gartley pattern. So again, X to A, initial impulse leg, A to B, coming down to our 618, B to C, coming back into a 618, and a CD completion right there, right here in the zone between the 786 and the 127. Do we have another one right here? Yep, we have another one right back to back. This is a great example because we're going to have a deeper C leg this time. So again, and I'm actually going to see if you guys can identify it. Pause for a few seconds here. All right, so we have our initial impulse leg. We have our swing high to swing low. It's going to be our X to our A leg. We're going to take our Fibonacci retracement tool, bring that from swing high to swing low here, X to A, and we're going to line up looking for the 618. You can see the 618 is hit once again, giving us a valid B leg for our potential Gartley. Then we want to take our Fibonacci extension tool, bring that from our swing low, our A leg, up to our B leg, and we're looking for price action hit the 618. Now in this case, price action actually comes down, hits the 618, retraces back up, but we never break above our B leg. So we never quite have a completion of a C move. So if you're watching this initially, it's going to look like this. You're identifying your X to A. You've got your B leg moving up. You're waiting for a C pattern, a C move completion. You're saying, Akil, all right, I got my first legs. I see it. This looks like a potential Gartley. Now I need a 618 retracement for my C leg. So boom, price action spikes down. We get our valid C leg, and you can actually start doing your predictions from here. We can. It's going to be harder because I scrolled back on this, but you can start doing your predictions. We can bring in a 127 extension from our A leg to our B leg and back down, which is right here. We know our 786 is a little lower, and if we were to copy and paste and do a ABCD pattern, potential ABCD pattern completion, it's going to be hard to get this on without scrolling over and cheating. We know that our ABCD pattern, we can see that our ABCD pattern is going to line up right at this 127 extension. So we have our potential kill zone right in here to sell this Gartley pattern completion. But, however, the market spikes up. We never break past that B leg and we continue down. We do another push up. And you can see my price action actually goes sideways for a little bit, never breaking that B leg. So this is still we're still on the C leg completion right now, and then we spike down lower. And what happens? Well, we come all the way down to test A. Now this is still a valid pattern as long as we don't break this A point. And you can see the market comes right to it, but we never penetrate it and push beyond it. This is still a valid C leg. So what we have to do is adjust our C to here, and as long as we keep pushing down, we just need to adjust our C move. Now, give it some time. As the market rallies up, we still have our same kill zone. Now we're not going to get the same type of ABCD pattern completion. Obviously, since we push down to retest A leg, our ABCD pattern completion is going to end us up right at B leg. But you can still see we have our kill zone between the 127 extension, which let me see if I can. I'll just do it over for you guys. Our kill zone between the 127 extension. Let's put it down here. And we still have our original 786 retracement. Price action does what? And let me just measure the C leg out. C, we're looking for our potential D up here. Price action comes up, just hits our kill zone. Doesn't quite hit our 127 in this case. It actually hits it again if you were to enter later at the 127. But you can see rolls over and gives us a winning trade. So this is a perfect example of how it's not always going to be pretty in real life. It's when the markets move, unfortunately, they don't always move harmonically. We love it when we get a perfect X to A to B, B to C, and C to D pattern completion. But oftentimes it's going to be a little choppy, and it's important that you know how to handle it when price action does move choppy, as in this case. But you can see the pattern still completes, whether you took it right at the 786 or whether you took it a little higher at the 127. Whichever way you traded this, the pattern still completed and rolled over for profit, giving us a great Gartley pattern. Let's see if we can find one more, and then we'll go ahead and talk about stops and targets. Seeing cipher patterns. Cipher patterns is this one. Let's see. We have our initial leg. We have our X to A. I don't think I need to draw in the letters for you this time. We can take our Fibonacci retracement, go from swing high to swing low, and you can see we don't quite get to the 618. So not going to be a valid Gartley pattern, and we can erase our stuff and look for the next one. You can see how frequent these. This is a 5-minute chart, and we've been scrolling through a couple weeks, but you can see how frequent these patterns appear. Here's a cipher, or close to a cipher pattern right there. All right, another cipher. Come on, get one more Gartley for the gang. Here goes one. All right, we have our initial impulse leg. Actually, let me pause for a few seconds, see if you guys can identify this first before I get into it. All right, so we have our initial impulse leg right here, or our anchor leg. Swing high to swing low. We don't necessarily break structure in this case, so this is going to be an anchor leg, remember? But regardless, we have our X to our A move right here. We then want to bring in our Fibonacci retracement, swing high to swing low. Do we come hit the 618? Yes, we do. Price action levels off right at it, giving us a valid B leg. Next, we want to bring that same Fibonacci extension, retracement tool, excuse me. We want to go from our A leg up to our B leg. Do we hit a 618? You can see the market just spikes down there on a wick, but that still counts. Remember, it doesn't have to be the candle close. As long as the 618 gets touched, it's a valid C leg. So we have our C leg down here. And then, as always, we want to measure out our kill zone. First thing I want to do is I want to take my ABCD pattern completion. So I want to copy my A to B leg. I want to put that on to the completion of my C point and say my ABCD pattern completion is going to be right up here. I want to look at my 786, which is a little bit lower. And you'll see usually when we retrace rather than the 618, our ABCDs and our 127s are going to be a little higher than the 786. And lastly, I want to take my Fibonacci extension tool, go from my A leg to my B leg, and look for where that 127 comes in. And that comes in right in the middle of my ABCD pattern completion and my 786. And you can see there's a nice little kill zone right here for another profitable Gartley pattern completion. So I hope that was able to train the RAS a little bit. What I expect you guys to do is go through this on your own over and over again. But I think it's important to see how this pattern forms on an actual price chart instead of just seeing me draw it out. Now that we have a good idea at what the Gartley pattern looks like, it's time to discuss entries, stops, and targets. We all know that the 222 Gartley, or the perfect Gartley, is going to complete at three levels. A 786 Fibonacci retracement taken from our X leg to our A leg, a 127 Fibonacci extension taken from our A leg to our B leg, and an ABCD pattern completion. With that being said, as you've seen going through the few charts and examples that we did, in the real world, price action often doesn't line up perfectly, and what we get is a zone. We'll get a nice kill zone, or what Carney likes to refer to as a potential reversal zone, somewhere between the 127, which may be a little higher, and the 786, which is usually going to be our lowest entry point. Now, it's a valid pattern as long as it completes somewhere in that zone. But what I've used in my trading is, or what I've found to work best, I should say, is to pick out a single point of entry so that we can be consistent time in and time out while trading this pattern. Now, in order to find out what point that's going to be, it's going to take a lot of back testing and going through chart after chart after charts, comparing different entry zones. But me personally, I use the 127 extension. So wherever this 127 extension lands, that's where I'll take the Gartley pattern. If our B leg pushes up, say a little higher, up to here, which is going to cause my 127 extension to be up here, well then I'll enter higher, letting price action past the 786 and the ABCD pattern completion. Again, I recommend when you do your back testing, going through this and seeing if one zone works better than another for you, and that's going to depend a lot on how aggressive a trader you are. But the 127 extension is a good point to start as far as taking the Gartley pattern. So now that we have our entry zone, let's talk about where stops need to be. A stop loss needs to be above our X leg. Our X leg, which is the start of our first impulse leg, remember our X to A, that's our swing high to swing low in this case. It also represents a major level of structure, and this is our protective point in this pattern. We know that price action reacts very powerful when it gets to structure levels. So it's important that we have our stop above this X leg because we're protected by structure. And you'll see time in and time out, price action actually push up, testing this X leg. Unfortunately, there's a lot of rookie traders that have their stops there when trading this pattern, but you'll see price action come up, test this leg, and then reverse down. And what you don't want to happen is you don't want to be one of those traders that has your stop loss right at this leg or maybe a little bit above it, have price action stop you out, and then roll over for a pattern that would have been profitable. So we need to get stops above this X leg every time, and a good rule of thumb is doing this. Take our Fibonacci extension tool, and we're going to draw a Fibonacci inversion. So we're going to go from our A leg, the bottom of our impulse leg, up to our X leg, and then we're going to bring in our 113 Fibonacci extension. Again, our 113, so 113. This is going to give you a good level to put stops above. So in this case, our 113 Fibonacci inversion is from 105, is at 105.10. We want to make sure to get stops above this level to be as safe as possible. So we have entries, we have stops. Lastly, targets. Targets for this pattern completion is going to be very similar to an ABCD pattern completion. We're going to take a Fibonacci retracement from our A leg. We're going to swing that up all the way to our D completion, and we're going to look for our 382 as target 1 and our 618 as target 2. If price action pushes up, say we come up to test our X leg, then we're going to roll our Fibonacci's, meaning we're going to drag it up to the highest point, and we're going to start to adjust our targets. Let's take a look at a few patterns in the market and see how this works. And let me scroll back to see if I can find a few that we looked at earlier. Yep, here goes one right here. So again, and we'll start from scratch with this. We have our initial impulse leg, our X leg to A leg, swing high to swing low. X to A. We then want to bring in our Fibonacci retracement, swing high to swing low, looking for our 618 to be hit. And remember, price action can't hit the 786. In this case, we have a valid pattern. We then want to look for our C leg. So we're taking our Fibonacci retracement tool once again from our A leg to our B leg, looking for at least this 618 to get hit. And remember, this leg can push all the way down. We can push all the way down as long as we don't break the A leg. There we go. And then we're looking for a 127 extension for our pattern completion. So I take my Fibonacci extension tool. We'll go from this swing low, our A leg, to our B leg, and look to line up our 127, which comes in right at 104.73, giving us a Gartley pattern completion. So our entries are right here at 104.73. We actually get some double top action up there as well. For stops, we're going to take our Fibonacci extension tool from our A leg back to our X leg and back down. We're going to double click on that and make sure we bring in our 113 Fibonacci inversion, which comes in right at 104.80. So we want to make sure to get stops right above 104.80. Lastly, for targets, we want to take a Fibonacci extension tool, or retracement tool, excuse me, from our A leg to our D leg. Now remember, we have to adjust it for the highs. You can see we push up a little past our 127. So we bring it to the high of this structure level, and we're looking for target 1 at our 3D2 retracement, target 2 at our 618. In this case, you can see that price action did roll over. The 3D2 was hit. However, price action pushed up and never hit the 618. Very important. Once target 1 is hit, I'll roll my stops to break even. So after target 1 is hit, I'll take my stop loss from up here at 104.80. I'll bring it down to wherever I entered the market at. And in this particular example, I would have got stopped out for break even on my second position. Still making it a profitable trade and not taking the ensuing loss that came if I would have kept my original stop losses on. So there you have it. That's the Gartley pattern, one of the most popular patterns out there in the market. And now you guys have a good idea of how to trade it.